Hello everybody, Benga Latunji here, welcoming you to Chijem's ACCA channel, looking at the general requirements of the listing rule on the stock exchange. The listing rule usually is contained on what we call the Green Book. So if you are hearing the Green Book for the first time, please know that it connotes the general requirements listing rule, and the book that contains it is called the Green Book on the Stock Exchange. We are still on strategic financial management, and we are looking at the financial environment and capital market institution as a topic. Fundamentally, anybody that is on this stage now is at or she's at the apex of his or her training to become a chartered accountant, and also must be a magnet or a big professional to have been learning this. And for any organization that is listed or that is about to be listed, and for anybody that has interest in this topic, I could say congratulations, because it's an evidence that the organization is having results, and also that that person that is listening to me right now is having a result, and somehow you are growing in the career. That is the truth. So I congratulate us, and now we want to go into the topic. And before we go into it, a prospectus, we need to know the definition of a prospectus. What is a prospectus? A prospectus is a document that communicates the evidences and everything as much as possible that an investor needs to know about an organization that want to be enlisted, or that prefers that people should subscribe and buy to their share. So that is what a prospectus is, and it is important in this discussion. We had earlier discussed about the role of stock exchange, and now we want to look at the rules of listing requirements. Then we made us to realize that stock exchange provides the platform for buying and selling. Please don't forget. Also, it provides liquidity to the investor. It regulates the activity of the stockbrokers. I want to believe we know that we cannot buy and sell on our own alone, because the stock exchange market, the capital market, is highly regulated. So we need professionals to trade on our behalf, and we give them mandates. Mandates now could be electronically, and some are still using physical. Please let us know whether papers are still being used in your country or in your environment. But as I speak now, we use it has been digitalized over here. Also, stock exchange encourages transaction in the new issue market. And last but not the least, on stock exchange role is that it helps to spread the promoters risk. As we move into it, please don't forget to like GGM Strategy channel and subscribe to us. Straight away we go into the topic for the day. First of all, an application for listing on the stock exchange will only be entertained, will only be welcome, if sponsored by the dealing members on the exchange. What do we mean, and who is a dealing member? A dealing member is a recognized professional stockbroker, maybe an organization, maybe an individual. And without this dealing member, an interested participant on the exchange could not by itself, I'm using it for an organization now, or better word we can say for ourselves or himself, could not have been entertained or be allowed. So we must pass through a dealing, a recognized professional, and don't forget that the dealing members of the exchange too are registered. There are other listing rules because they could be allowed to trade on the exchange. So we need to pass through a dealing member who is recognized by the exchange to make our application for listing known to the stock exchange. So that is the first thing that will be required of us. Also, the company must be a public company, and if at all they were not, they need to regulate that aspect of their income. To its shares. So they must issue an invitation after they've applied. There must be invitation to the public for subscription. Don't forget that methods of subscription, methods of trading on the exchange have been dealt with, and we have like 9, 10, or even more methods. You can check up the video also. So the company must be a public company. That's another requirement, and must have given invitation to the public. Not that the share will just be out without any formal invitation for the public to subscribe. And also they must have satisfied the council of the exchange that the public is sufficiently interested in their company's share. We may ask why. The reason is simple, so that at the end of the day, what they actually desire will materialize, because we can have under subscription just as we can have over subscription of shares. And when we have under subscription, there are a lot of other costs that comes with it apart from time being wasted and the like. So it is important for them to do that. Also, all securities for which listing is sought after must first be registered with the Security and Exchange Commission. So for us to play on the stock exchange market of any country rather, we must have been recognized by the regulators of the capital markets. That is, the Security and Exchange Commission must have registered the organization. So we must have registered with the SEC before we can register with the exchange market. That is where the real trade actually is taking place. So all securities, all organizations that want to be enlisted on the exchange must have registered with the Security Exchange Commission. Also, all application and documents to be considered and approved by the council should always be submitted to the exchange at the earliest possible date. So not that we want to go live today and it's now that we are bringing necessary documents. No, it doesn't work that way. Don't forget that we are talking about activity of capital, which is capital in nature, and is with. So people's fund, people's resources, organizations' resources are at risk here, and we cannot just toil with it. So document needs to be submitted as early as possible so that necessary activities and preview will be done on it before we allow it to fly for the public to subscribe. Earlier when we are starting, I told us about our prospectus. So the final prospectus is a financial document. Also, it's an account, but prospectus is basically prepared for the purpose of enlisting or of buying and selling our stock, of selling our stock in the capital markets. So it must be approved, and it must be pre-approved and pre-forwarded also to the Council of the Exchange Market. And for the Council of the Stock Exchange to approve it and preview it, they must have had it, and this must be done before the final council or the board meeting of the organization that want to be enlisted takes place. So it's important that the stock exchange receives it as early as possible, so that can be done. The approval, their consent can be sought after, then the final approval by the board and the like should take place. Moving on, before the grant of listing now, all applicant companies must sign a general undertaking that they will provide promptly certain information that may be required of them about their business operations, and that they will follow certain administrative procedures. So part of the general requirement of listing is that organizations must have critical processes and procedures in place, and having had that, equally they must be able to communicate it to the stock exchange as soon as they are required. So all this, they must be meticulous about it, and an organization that will be on the stock exchange must have laid down processes and procedures. Apart from the internalized one, they must equally follow the administrative procedures of the general requirements of the listing on the stock exchange. That is, from the green book too, they must be compliant. Where the stock exchange desire to increase, or where the organization desire to increase the authorized share capital now, where the organization that is enlisted or sought to be enlisted wants to increase its authorized share capital, the directors must state in the explanatory circular or any other document that they are using to communicate between the stock exchange and the public, and must be accompanying the notice of the meeting. Also, whether or not they presently have any intention of issuing all of the shares or the parts of it. They have authorized share capital before. Now if they want to increase it, they must make the exchange to be aware of it, and when the exchange is aware of it, they must equally let us know this new authorized level of share, what percentage of it is going live, is going public. You see, all of it, you see, part of it and the like. So that information must be given and must be precise and concise. A company which wants to be listed on the stock exchange must be ready to comply to the minimum requirement of capital, of its capital that must be on the public domain. Usually there is a minimum of the capital that must be on the public domain. I think around 25%. It could be more, it could be less, depending on the country. But that organization that want to be listed and want public investors to subscribe must be ready to forfeit it to the public. So a company which applies for listing must comply with the minimum public floating requirements, which usually will be prescribed by the listing standard criteria chosen by the issuer. Also, the subscription list must remain open and must be made available to the public to the stock exchange and its authority for minimum of 28 working days or as prescribed by the nation. So the subscribers, this is after people have subscribed, and those that have subscribed, if those are stocks that are already on the exchange, who are the subscribers? So it must be on the public domain. It must be on the public domain. So there is, because it's a public platform. It's a public investment platform. So that we are an organization, once we've agreed to go public and look for capital on the public domain, there are some things we could not keep secret any longer. And one of it is this: the list of our subscribers. The subscription list must remain open for the public, at least for some certain period of time. Also, a maximum of 10%. Also, this is not cast in stone. It could be changed. Or has the stock exchange will prescribe from time to time the maximum that the organization can allot or allocate to its staff. That's maybe for any reason, for stock options of the directors and the like. The maximum percentage of that share, the limit, will be communicated to them and they must adhere to it. Where a proportion of the share now in a placement or as a public offer is reserved for the employees now, the company must provide the exchange, along with general undertaking, a list of member of staff, so that anybody that has been allotted the share, we will know that, okay, even though it's a staff, she's a staff, this number of share has been allocated to, and that it's only staff member that enjoys this part of share. It's for regulation purposes, it's for compliance purposes, and also all companies admitted to listing on the exchange must pay a listing fee as will be specified from time to time. I want to believe that we agree as to this or we anticipate it, because the exchange too has its own costs in carrying out its activity on behalf of the public and investors and the organizations that want these shares to be purchased in the public domain. Moving on, all clauses in the company's memorandum of association, articles of associations, and critical documents that restrict the transfer of fully paid up share must be expunged. And I want to believe you know the reason, because if we say we cannot transfer our share as investors, as subscribers, then it contradicts one of the purposes of the stock exchange, to make liquidity easier and possible. So let's say, for example, I have a share now and I need cash. It simply means that clause is saying that I could not on my own sell my share, and that is fundamentally against the purpose of existence of the stock exchange markets, to make liquidity possible for investors. So people should be able to buy and sell the share easily at little or no notice, at their own free will. So all clauses in company's memo and article of association that restricts transfer of fully paid up shares must be expunged, and they must be ready to expunge it before they can say they want to be listed on the stock exchange market. Also, all listed companies must advertise the notice of their annual general meeting. There is no secret general meeting anymore. They must give notice so that participants and interested investors could attend. So they must be able and they must comply with this notice being made public. Is part of general listing rule, and it must be at least two widely read newspaper of any nation, particularly over here. I wouldn't know in your jurisdiction. You can let us know what is practicable, and at least 21 days before the annual general meeting, that is before the AGM takes place, so that can give room for planning to attend by the interested public subscribers. Now, another requirement of the listing rule is that when the money for the subscription of the shares now, pending the time that it will be allotted, must go into a designated account by the issuing house. So the subscription monies pending allotment and return of funds to subscriber must be deposited in a designated bank account appointed by the issuing house and the company. So not that anybody takes the money away or immediately they have it, they use it, and no. It's an aspect that is regulated. All the monies must go somewhere. Then when the allotment takes place, they take the exact amount allotted out of it. Then if they have oversubscription, they will need to return the fund. If they are under subscription, that too has implication. They will need to allot based on certain rules that they've agreed upon, and know whether they will need to ask the public to subscribe more or otherwise. So a designated bank account must be provided, and all monies for subscription must go into it. Another regulation and requirement is that all accrued interest in respect of cleared allotments. Now we've allotted the shares. Don't forget, we subscribed before. The subscription must be over or under. Then those that are allotted are those that actually purchased the shares. Now they know how many units of shares they've had. So all accrued interest now, all monies in monetary terms that have been used and expended on those activities must be paid to the company to offset part of the cost of the issue. And all this aspect of regulation must be complied with. Also, the return monies arising from the unsuccessful or under subscription of application. If an organization experiences under subscription now, there are fees and interest that must be paid to the commission, because the stock exchange has done its own duty. Don't forget, we said earlier that the issuing house, the company issuing the share, must make public notice, must advertise, must be sure that people or the public will subscribe to his shares, and must have done its part literally, so that there will be successful application. But if there is unsuccessful application for whatsoever reason, it attracts interest. That is, the stock exchange is going to have its own money, its own interest of the activity conducted, because the stock exchange has to run its business too. So organization that is being listed must apparently know what it's doing and must have done its own due diligence and the like before they begin to determine that they want to go live and they want to make a public offer or go on the stock exchange. While I would have loved to recap all these general rules and requirements of the listing on stock exchange, but I wouldn't want this video to be too long, as part of what my listeners had let us know that's okay, it should not be too long. So I will not do that, but I will advise that you should replay and the like. So I will introduce us to what topic we are going to be doing next. So we are going to be having the financial management environment as a topic, and under it we'll be looking at the economic environment of a country. You'll be looking at the international financial institutions, IMF and the like. You're going to talk about other influences of government on businesses. We are going to be looking at the financial management framework, the financial markets, the money market. Don't forget we are dealing with capital market now. We are going to talk about money market instruments that we can use. So these are subtopics under the financial management environment that we will be discussing. Without any doubt, I believe strongly you must add one or two things picked up during these lectures. I'd love that you subscribe to James channel, click the notification button, comment on your experience, especially in your country and the like, about your stock exchange. And you can reach out to us if there are any areas you want us to throw more light on, or maybe on a personal advisory level. Please reach out onto us on James Associate. The email, if you want to send email to us, the email is being displayed now, so you can reach out to us on the email being described. Comment, like, and if you've enjoyed it, please share this video on different platforms so that other people that need to have information like this will be able to get it on time and around you. You can reach to more people, and you encourage us by doing so, and I believe that you want to encourage us. So from James Associate channel, Gbenga Olatunji FCA is my name. Next we meet, we'll be looking at the financial management environment, talking about the economic environment, international financial institutions, other influences of government on businesses, the financial management framework, the financial market, the money market instruments that we can use. From James Associate channel, we add value to life, we add value to your businesses.